If you're an investor and you know it, clap your hands. If you are an investor and you know it, clap your hands. If you analyze the stocks and you hold them for long, if you're an investor and you know it, clap your hands. If you're a trader and you know it, clap your hands. If you're a trader and you know it, clap your hands. If you analyze the charts and you hold the stocks for short, if you're a trader and you know it, clap your hands. Hey folks, Rachana Ranade here and I welcome you all to a brand new video which is about investing versus trading. Any new entrant in the stock market first believes that he's an investor, but slowly and steadily he changes his profile and all of a sudden becomes a trader. Then what happens in this entire process of shift from an investor to a trader? Many a times he burns a lot of money and then he says that stock market is a gamble. He'll label it that way. So in today's video, we are going to talk about what is the exact difference between investing and trading and why knowing yourself is very important before you start your investment journey in stock market. Let's try and understand the crisp difference between trading and investing. Well, trading involves short-term strategies. In a very short span of time, you're going to frequently buy and sell and try and generate profit. What's about investing? Investing involves strategies for a longer time horizon wherein the main purpose is not to create a short-term profit, but it is to create a long-term wealth. If I talk about what is trading based on, trading is based on various points like trading technical indicators, psychology of the market, money management, risk reward, and so many more points. Whereas investing involves checking the fundamentals. Fundamentals of what? Fundamentals of the company, fundamentals of the industry, of the economy. You have to check out the competitors and few more points. If I talk about the risk, obviously for trading, risk is a shade on a higher side because of a smaller time frame. You have to be very precise with your entry and exit points. But if I talk about investing is, again, I'm repeating, but it is for a long term. It's for a longer purpose of wealth creation, and that is the reason why the overall risk is lower. If I talk about the outlook for a trader, the outlook can be continuously changing. Today the outlook is positive, tomorrow the outlook is negative. In fact, even intraday basis also, the outlook of a trader can change from time to time. But for an investor, ideally, for a longer term perspective, the outlook for the market is always positive. If I'm talking about how much time you have to dedicate if you were to be a trader, ideally you have to be in front of your screen from 9:15 to 3:30 and try and fish out opportunities during the day. But if you are an investor, you need not be in front of the market every day. You can just study, analyze, invest, and kind of forget. You can just check out the stock or your investment on a monthly or a quarterly basis. Well, now let's understand what are the 7 key points that you should understand if you were to be a good trader. The very first one is you should gain knowledge. Well, you can't start anything without having proper knowledge, and the same rule will obviously also apply for trading. Now, if you were to be a good trader, you should have hands-on knowledge about technical analysis. You should know what are the different types of trends. You should know what are the different types of patterns. You should know so many more points about technical analysis. And if you don't have that knowledge, I do have a course on technical analysis. So if you want, you can go and surely check out on my website, rachanaranade.com. The second point is do virtual trading. So assume that you do my course or you already have knowledge about technical analysis. Now comes the second point where you apply your knowledge for the trading purpose. But should you ideally go and start trading in the stock market? No, don't do that. First, try and take paper trades. Okay, what are paper trades? Is as good as just writing down. Okay, I would have bought this stock at this level right now. This is my target price. This is my stop loss. Okay, once you start getting that feel that, nice, my trades are going right, then slowly you can start and put up actual trades rather than virtual trades. So it's a journey of learning and then possible earning. Right. Third one is the trading strategy. So while you write down all your trades on your paper, then try and see what is working for you, what is not working for you. So basically you try and and make a strategy for yourself. Okay, assume it's a swing trade strategy. Okay, in a swing trade you'll typically see, okay, this is what, let's say if an inside candle is formed, whatever, just as an example, then you will enter. If this point is hit, then you will exit. So what did you do? You just tried to find a strategy. Are you going to stick to that strategy? Yes. Okay. Otherwise, many times it is there in your mind but not on your screen. Should not happen. Have a strategy and use it properly. Next one is avoid a lot of leverage. As an intraday trader, ideally you are bound to use leverage, but please don't overboard on that. You might end up losing a lot of money. The next point is very, very, very important as a trader. You must be able to manage your emotions and you should be able to take better decisions. You know what happens? You take a buy trade based on your strategy. Okay. It might happen that the moment you buy, it starts falling. Okay. And you're like, now what? Now what? You are in sudden tension and you close the trade. Okay. And what happens after you close the trade? It is bound to go up, right? First time, same thing happens. Second time, same thing happens. And third is your revenge trade. बघूच कसं नाही जमत मला. Then you are going to enter the trade just with the emotion of revenge and you are like, I am going to earn profit in this trade. And you might be more irrational in the third trade and again you might end up losing money. Right? So there's an amazing feature which Zerodha has introduced right now, which is the kill switch feature, wherein if you lose 2 trades back to back, you can enable this kill switch feature, wherein Zerodha will not allow you to trade for next 12 hours. So these 12 hours are for what? Sit down, relax, try and analyze what went wrong, and then take the third trade. I think this is an amazing feature. Amazing work by Nitin Kamath and his team. Next one is use your stop losses. Many a times traders have stop losses, absolute stop losses. Where? In their mind. The stop loss should not be on your mind. It should be on your system. If that be so, then only you will honor the stop losses. And the last point is do a post-trade analysis as well. I was talking about writing down those trades, paper trades. That is when? That is before taking the trade. Okay, once you close off the trade, again update that sheet and then analyze that out of whatever trades you took, which went in favor, which went against your thought process. Then try and analyze what went right for you, what went wrong for you. Instead of writing it on a piece of paper again, there is one more feature which has been introduced by Zerodha, that is Zerodha tags. This tags feature helps you to key in whatever I told you right now. Instead of writing down on a piece of paper, it's as good as you write it down on the system. I hope you have understood all 7 key points which you have to remember if you were to be a good trader. Well, I hope you have understood about the 7 key points that you have to remember if you are a trader. But sometimes magic happens and traders turn investors, right? How? Let's understand. Assume that I'm a trader, okay, and I take a position in a stock. But after that, what happens? It keeps on going down and down. Where is the stop loss? In my mind. It's going down. Still the stop loss is in my mind. It is still going down, and at one point of time I feel that it has gone down so much. Now it makes no sense selling that stock at such a huge loss, right? Then what will I say? But fundamentally the company is strong. Okay, and I feel that at some point of time it will surely go up. So I am believing in that company as a long-term story. And that's how I turn automatically into an investor. But if you want to be a good investor, a predetermined, a pre-decided investor, now in the next section, I'm going to talk about 7 key points that you have to remember as an investor. Now let's understand the 7 key points that you have to remember as an investor. The very first one is, as usual, train yourself. Now for that, what you have to do? You have to train yourself to identify companies which are good companies. Now what do I mean by good companies? They should be fundamentally strong companies. Now the big question is how to do fundamental analysis of a company. For that, either you read a lot of books, you go through a lot of YouTube videos, or you check out my course on my website rachanaranade.com, in which I've taught in detail how to analyze a profit and loss, how to analyze balance sheet, how to check or how to compare that company with its competitors, about industry, about economy. So many points I've covered in that specific series. So if you want, you can check it out. The second one is you should set clear investment goals. So I tell this so many times in my YouTube videos as well, that what is step number 1? Step number 1 is to set a goal. And based on that goal, you have to start your investment. So for example, if you have a very short term goal, okay, let's say like 2 months, 3 months goal, and you invest in a stock like, let us say, Aarti Industries today, assume. Now, if you have seen my video on Aarti Industries, which was only for pro investors, in that I have already told that it's a company which is into an expansion mode right now. They're doing a heavy capital expenditure. So, a company which is doing a heavy capital expenditure, their operating cash flows are ideally going to be negative. They might not be able to generate good cash flows in a short span of 1 month or 2 months. But if your goal was a long-term goal, say 3 years, 5 years, in that case, I may say that Aarti Industries would have been a good bet, because at that point in time, their capex, which they are doing today, might start generating revenues, right? So what is the first step? Set a goal. And step number 2 is invest based on your goal. Understood? The third one is know your risk appetite. So what could happen? Many times you would invest in a share, then there could be some panic, and when the share starts going down, you could just sell off that share in panic. If you are going to do that, then what is the problem? Problem is that you have not done a proper KYC. And what is KYC? Know your customer. But what term do I use? KYS. Know yourself. You should first understand your risk appetite. Okay, and if you know that you are a risk taker, in that case, you might also consider investing in companies like Yes Bank, or even for that matter, Idea. Of course, this is not an investment advice. I'm just telling you, a person who is a risk taker may feel that, what if there is some nice turnaround story? I might be in a position to double the investments. But if a person who has a very low risk appetite, if that person invests in a company like Yes Bank or Idea, be sure that he is going to be in tears after a few months or years, right? So moving ahead with the fourth point, which is invest early and invest regularly. I'm sure everyone has heard about the term SIP. What is SIP? Save, invest, and prosper. Systematic investment plan, right? So what do you do here? You invest a specific amount of money every single month. Okay, can you do that very easily in mutual funds? Yes. Can you do that in stocks? You can. Possibility number 1, do it manually. Okay, so for example, you choose your list of 5 favorite stocks which are fundamentally very good, and without fail, every 4th of the month, every 5th of the month, 10th of the month, whatever, you go to your specific broker site, you add these 5 stocks, and you do that every month on month. Possibility 1. Possibility number 2, you can also create a small case for yourself. You can create a small case, add these 5 stocks, and define that every month add 1 quantity, 2 quantities of those stocks in a systematic manner. In that case, you need not do this manually every month. So it's just about saving your efforts. Well, just in case if you don't know how to create your own small case, I thought let me just quickly tell you how that can be done. So that's the small case app. What you have to do is just to hit that create button. Then you get this option of create your own small case. Now, just as an example, okay, this is not a direct recommendation. This is just as an example that if I were to look at futuristic stocks, okay, which can these stocks be? So for example, I feel that insurance sector overall penetration in India right now is comparatively less. So I search for some insurance stock, let us say HDFC Life. So I can search here and I can add it up here. Okay. Next, I feel that IT can be a game changer in the coming few years. So one of the good stocks in IT space, fundamentally, Happiest Mind is what again I can add up. And one more stock which I feel can be one of the future stocks. Why? Because more and more retail participation is coming up in India right now, and there are only 2 major depositories. One is NSDL, one is CDSL. Out of these 2, only CDSL is listed. So I can say CDSL. Ta-da. Before I proceed, again, this is not a recommendation. I just feel that these 3 companies are fundamentally good. So I'm showing you an example of how to create your own small case. Once you have added all these 3, I'm just going to hit done. Okay. Now, if you want, you can also change the weightage of this. So, for example, I want the HDFC Life weightage only to be, let us say, 25%. Okay. For Happiest Mind, let's say I want it at 38%. Okay. This is just random examples. Okay. And here, then automatically it will take the balancing as 37%. Okay. With that, now I can just hit save. Can I name this? Yes. So, let's say I am naming this as CARR. Rachana Ranade Future Stocks. Okay, so if I name it like this, and investment objective is whatever right now, but of course, what is that? I believe that these can be the upcoming stocks. Then I just hit save small case. Once I do this, yes, your small case is saved. Now with this, what happens is that every single month, automatically you can create an SIP. Now what will happen with this? Month on month, one stock or whatever as per the weightage, that will keep on adding to your portfolio. Number one advantage. Number two is that you can track the performance of your small case on a month on month basis. And very important one, you can hit that share small case button and you can share this link through WhatsApp, through Insta, whatever. And I think this can be a good way of sharing knowledge with your friends and family members. I'm sure you might have started your investment journey with the advice of your friends or family members. So if you want, you can do the same thing and move on. So what are you waiting for? You can just check out the link in the description box and start your journey. Next point is about look for companies having a moat. What is moat? Moat is nothing but a competitive advantage. This word has been used by Mr. Warren Buffett many times. So what can be a competitive advantage? Competitive advantage can be about a brand identity. It could be about a patent. It could be about the size or the market share that the company has. If that be so, it's always good to invest in companies having a good moat. Example can be of Asian Paints. Asian Paints has a good brand. They also have a good market share. Almost 40% of the paint industry's market share is with only Asian Paints, right? Going on to the next point, you should be very much clear that you have to diversify your portfolio. We always say never put all your eggs in one basket. Same logic applies here as well. Are you going to have only one stock in your portfolio? No. Diversify it very well. And that is why have 100 stocks in your portfolio. No. Why? Over diversification is also bad, correct? So have a limited number of stocks in your portfolio. But always remember, if you are betting on a specific stock, let us say you have 10 stocks in your portfolio and number 1 stock is your favorite and number 10 out of those 10 is your comparatively lower favorite. Now you only tell me the amount of investment in that first stock and the amount of investment in that 10th stock. Should it be same or should it be different? Ideally, it should be different. The higher amount should be allocated for your most favorite stock, which is going to be fundamentally terrific company, and comparatively lower investment should be there in the 10th stock. I hope you have understood my thought process. And the last one is you should review and rebalance your portfolio. Are you going to rebalance every day? No. What you can do, check out the quarterly results. If 2-3 back-to-back quarters the company is not doing well, you may consider rebalancing your entire portfolio. Well, I hope you have enjoyed this video. Don't be an example of a trader turned investor. Define yourself, be either a trader or an investor. I hope you have liked this video. If you have, don't forget to share it with your friends and family. Till then, take care. Jai Hind and bye-bye.